Hello and welcome to Crux Investor. We caught up earlier today with Keith Coughlan, who's the Executive Chairman of European Metals. We talked through the project for this year, moving towards a DFS, most significantly advanced European lithium story, sitting within quite an advanced ecosystem there. Lots covered, fascinating conversation. Do listen to it. If you want our thoughts and opinions on it, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis on a variety of other topics you might find it useful. Commentary from experts from around the world, commenting on things like lithium, other commodities, companies. Definitely fascinating insights there. Training courses to help you with your diligence process. There's summaries of other interviews that we've done in case you don't have enough time to do it yourself. Plus, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from trolling and abuse. And if that sounds nice to you, and it should, go and join them, cruxinvestor.com/club. I would love your feedback too. So do give us a like, be appreciated. Leave your thoughts below. We'll get back to absolutely everyone. And of course, if you want to see precisely what we talked about, take a look in the list in the description below. Keith, good morning. How are you, sir?
I'm well, thank you, Matthew. How are you?
Not too shabby, not too shabby. Well, thanks for joining us for this lithium week that we've got on at the moment. So I've been wanting to hear this story for a while. I think we heard it over a year ago, but looking forward to catching up. So where are you at the moment?
I'm based here in Perth in Western Australia, so quite a distance from the project. But travel is problematic at the moment.
It is. Are you going to get there anytime soon?
I think so. Things are obviously improving generally and opening up. So I would hope in the next few months I'll be able to get back to site.
Oh, fantastic. Well, and Perth's not too shabby a place to be hanging out, so I don't feel too sorry for you.
There are worse places than Perth to be at the moment.
Well, okay. Why don't you give everyone that 1 minute overview of the business, and I'll pick it up from there.
Certainly. So we're developing the Cinovec project in the Czech Republic. It's a lithium project, a historic tin mine. It's a very large resource, and happily the macro conditions for lithium and EVs and things in Europe are very positive at the moment. So we're progressing the project quite nicely.
The European ecosystem, which people talk about, we talk about the American ecosystem, European ecosystem, Asian ecosystems, and people have got different views as to how advanced each are in terms of this EV thematic we keep talking about. So, can you sort of describe to us what's happening in Europe? Because we see news reports about zero carbon targets. We're looking at a lot of the automotive manufacturers against setting themselves targets with regards to new lines, new cars coming out. So what's your take on it?
Well, my take is that the EU has made its decision about what direction they want to take, and that is very much to green energy. There was the announcement last year, I think it was about May, of a 550 billion euro fund, green energy stimulus package, based largely around new energy, around a battery industry, around an EV future for the EU. And I believe that decision is made, it's done. So that is the direction that the EU is heading. And in order to get there, they have some very, very big and ambitious targets. But in order to get there, there needs to be a lot of work done, a lot of money invested in order to get there and get there quickly. So if you look at it from a pure supply-demand equation, Europe has always been historically the second largest importer of lithium anyway, and that's before the advent of this electric vehicle era. So that's only going to increase the demand for lithium in Europe, and there is no production. There's no production of battery-grade lithium material in Europe whatsoever. So the EU is in something of a quandary. China currently controls some 83%, I think is the number that's generally quoted, of downstream lithium chemicals. And it would be an interesting business plan for the EU to commit this amount of money to a new industry and then have to rely on China, for example, Asia in general, or really anywhere outside their own control for a significant portion of one of the key ingredients in building this industry. And, it would be bad business. It's certainly not sensible. And one thing that COVID has shown us over the last 12 months is global supply chains can get disrupted quite easily. So, I think that's the macro. That's why Europe is going so hard down this path.
Okay. And in your case, you're right. There's very few lithium producers there. I can count them on one hand. The supply-demand numbers look ludicrous. So Europe's going to have to kind of keep its borders open. They are going to have to continue to import here. But do you think there's going to be like a bifurcated market? Do you think that you guys are going to get a better price because you can be greener in terms of that supply?
I think they're two separate issues there. You mentioned the greener. I think that there will come the time when there will be qualification of your battery metal supplies, ensuring that they're coming from the right sources. This whole concept of ESG is becoming more and more important globally in all mining industries, but, particularly with regards to battery metals, new energy. That is, I think, going to make a difference. Whether you can get a better price, I'm not sure if it'll come down to that, because you're right. Europe is going to struggle to be completely self-sufficient in lithium, in battery metals in general, whatever happens and whatever the aspirations are. There simply are not the projects in Europe at any stage of development to make that happen. So yes, they are still going to be reliant on imports for some considerable time, but there is a distinct commitment within the EU to develop local critical materials as much as they possibly can. We saw the establishment of the European Critical Raw Material Alliance midway through last year in response to exactly this. And, it's just becoming a greater level of awareness that you can't keep relying on other parts of the world for these raw materials.
But countries have had critical mineral lists for years. Okay, that's nothing new. But so what is this new alliance going to do for you? Because I'm interested in understanding what powers do they have to help companies operating in Europe. We've talked about battery metals passports. We've talked about various mechanisms for taxing imports. So, have they got the power to do that? Is that there yet?
I don't think it's fully there yet. I think you're correct in identifying that, but I do think that there is a serious commitment to ensuring that these groups do have the power, the raw material alliances, and there are other groups. So, for example, we announced about midway through last year a strategic alliance with one of the EU bodies called the EIT, European Institute of Innovation and Technology. And there are a number of these EITs. There's one, for example, for InnoEnergy, which is the group I'm talking about, but there's another one specifically for raw materials and other matters. And the EU has identified that in order to make these macro plans actually work at a grassroots business level, they need entities like this to be go-betweens, if you like, between the policy and the significant funding at the higher level, as I say, right down to on the ground business, to ensure that they can hit these targets as much as they possibly can. So they are providing these groups with certain a certain level of power, if you like, or a certain level of influence to make these sorts of things happen. And, they can certainly improve the situation through doing these sorts of things. And if you look at this LCA, this lifetime carbon assessment of projects, it's not just for the miners, it's for the EV manufacturers as well. They could be doing everything right, but if they're sourcing their raw materials from somewhere that doesn't tick the boxes for LCA, then they're going to be marked down on their overall score as well. And the penalties for not meeting emissions is going to be significant.
Well, look, Keith, you mentioned one of the funds, the EIT InnoEnergy there. There seem to be quite a few funds putting a lot of money. We're talking, tens, if not hundreds of billions of bucks up for the different countries in the EU to, well, I guess it's the main aim is job security, but also to kind of secure this kind of greener future, which is the kind of main thematic here. How does that benefit companies like you? How do you take it? Well, maybe not take advantage, but let's say with benefit. How do you benefit from that? How do you insert yourself into that system where perhaps there are grants and funds available to a company like yours, where you're not having to dilute shareholders?
Well, it is actually a key, and it's a key part of it. The relationship we have with the EIT, the contract we have with them, in part has them assisting us in hopefully, achieving some of these grants, certainly in applying for some of these grants. And it's in both phases. You mentioned employment, but you also mentioned in terms of the green credentials. So yes, there's going to be, there are going to be job losses through the traditional car industry. Going from ICE vehicles to electric vehicles, there will be job losses. There's going to be job losses in going from traditional coal-fired power to green energy. There's a lot of coal mines, particularly in the area that we will be operating, and there will be significant job losses in those industries. So clearly the EU wants to, and the member states want to replace those jobs as much as possible. So, for example, there is one fund. It's a fund called the Just Transition Fund, and it was established by the EU to do just that, to help EU economies that have been previously reliant on coal to transition to green energy. And this is just one example. Now, this is a fund that we believe we will be likely to get some assistance from, because we'll be doing just that. We'll be taking historic coal miners and training them to be lithium miners. The area in which we're operating is a traditional coal mining area. And to give you some idea of the quantum, the EU has committed 40 billion euros to the Just Transition Fund. So they're not playing around with small numbers here. That's a very significant amount of money, obviously. So if you ask me how the project could benefit, we could benefit from the point of view of receiving funding, partial funding for the project from the Just Transition Fund. And there are other funds, that we are likely to be able to qualify for. But also we've already seen in this broad sector assistance from the EU in funding in terms of soft debt. You look at the European Investment Bank lent, I think it was 460 million euros to Northvolt, to start to build their battery factory. And that's on very good terms. And a portion of that debt, I think it was about 100 million euros, was subsequently guaranteed by the German government. So we are seeing that sort of offering, export credit finance and these sorts of things as well. So, our project will need to raise something in the vicinity of $500 million to go into construction. And if we were to get a portion of that through a grant, if we were to get another portion of that through soft debt, and the balance of the non-equity component through commercial debt, it means that your overall non-equity component is very attractive, and potentially more attractive than in other parts of the world. So that does give you some advantage, there's no doubt. And obviously, if you've got an attractive debt package, then the equity offering is going to benefit from that and also be attractive.
Oh, absolutely. I think people quite often forget to work out the cost of the money. People look at the capex or the opex and they look at what those numbers produce, but the cost of capital here and the way that you can interact with some of these funds, I think is going to be really, really important. But look, I appreciate you just giving us that kind of macro overview of what's happening on the ground across Europe there. But we better talk about your project though. Okay, so again, tell us a little bit about Cinovec, because you've got a couple of partners, a couple of quite big partners.
Significant partners in the project. Well, one main significant partner at project level. But so Cinovec is a very, very large lithium resource. It's by far the largest hard rock lithium resource in the EU. That's important, not just for the sake of being big, but it goes to long-term security of supply. It's also going to be a low-cost project, as indicated by the definitive feasibility studies that we have done to date. But in terms of our partnership, we bought the Czech power utility, CEZ or CEZ, into the project about 12 months ago now. So they came in at a project level, wrote a check out for nearly 30 million euros to buy 51% of the project. And that that money effectively funds the project through to our final investment decision in about another 12 or 14 months' time. So that's, they're a very important partner to come into the project. So CHES has a history of coal mining, and obviously, as we discussed just a moment ago, coal mining is being shut down. They've been moving into green energy for some years. They're involved in a number of other green energy initiatives. They own all of the electric vehicle charging stations throughout Czech. They are a shareholder in the largest onshore wind farm in the EU, for example. So, CHES have been going down this path for a while, and that makes them a very important partner for us. They also have aspirations to build battery factories, both in the Czech Republic and in neighbouring countries. So, they could well become an off-taker to the project eventually as well. The other partnerships I think you're referring to, as I mentioned, the EU midway through last year, but then we also signed a contract with the engineering firm SMS in September of last year. SMS, a very big, very well-regarded German engineering firm, and they're very well credentialed in this space. So very good to have SMS on board. They'll deliver the definitive feasibility study for us, as I say, in about 12 months' time, and that will come not only with a lump sum fixed price turnkey EPC contract, but it'll also come with product specification guarantees and process guarantees. So a very important contract there with CHES. And so 2020 through those three partnerships, agreements, contracts, we've significantly de-risked the project, and just makes it far more likely that this project will go into production. Then when we add in that the groundswell, the tailwind that we're seeing out of the EU that I mentioned earlier, we're feeling pretty confident about the way this project is going.
Okay, we know SMS Group through conversations we've had with Neo Metals, because we understand the size, scale, and abilities there for sure. Very, very good partner. Just back on CHES though, because are they entirely state-owned, or is it predominantly state-owned entity?
Sorry, no. So CHES are a publicly listed company in the region. I think their market capitalisation is about 12 billion euros, but they are 70% owned by the Czech government. Got you.
Okay, so the question is, does that help you with permitting, licensing, and all matters admin in country?
Well, yes. Look, it definitely helps us. It doesn't help us in the sense that it rubber stamps us. We don't get a rubber stamp through just because we're partially owned by the government. The project is partially owned by the government. We still have to go through the process, but CHES has been operating in country for decades and operating very successfully in country for decades, both in the mining space, in construction, with regards to land access permits and all of these sorts of things that we otherwise have very limited experience in. They have a whole department within the organisation that handles these sorts of things. So it will be very beneficial for us, yes.
Okay, right. So you've still got to go through the process and do things the right way, but at least people are paying attention. Okay.
Exactly.
Let's talk about what you're hoping to produce. Okay, because again, you can sit anywhere along that lithium supply chain in terms of the types of products that you could produce, I suspect, but you need the right technical expertise now. So where do you hope to position yourself in the market in terms of the products, first of all, and how do you capture market share in Europe?
Okay, so we've completed 2 preliminary feasibility studies into the project. The first one was for the production of battery-grade lithium carbonate, and the second was for the production of battery-grade lithium hydroxide. Now, we have produced both of those materials to battery-grade specifications in our test work leading into those preliminary feasibility studies. The reason we went to hydroxide was that at that time, the demand for hydroxide was ramping up, and that's continued to be the case. I read an article only 2 days ago about the foreseen demand for hydroxide over carbonate and how that gap is simply going to widen. So we wanted to ensure we could demonstrate the ability to produce both of those. and we have done so. We've done so at lab level in small scale, and part of the definitive feasibility study is obviously to upscale that. So it's a fully integrated project. We're not looking to produce a concentrate to ship somewhere else to have it turned into battery materials. So we will be selling directly to cathode makers, battery makers, EV manufacturers themselves in a fully integrated project. There are no lithium conversion facilities in Europe whatsoever. So any current business plan to make a concentrate in Europe needs to be shipped somewhere else in the world for processing. That may change, obviously, particularly with the amount of support the EU is giving to becoming, lithium self-sufficient as much as possible, but it's not a reality as yet. So and only material that is actually turned into material that can be sold directly into the battery supply chain is going to assist the supply-demand equation in the EU. Right, so if you make a spodumene concentrate in the EU and you have to ship it to China, it's very unlikely it's going to come back to Europe, in any hurry.
If you're hoping to produce hydroxide, you've got to test that outside of the lab. You've got to do it at economic scale. So you're going to need to insert a pilot plant into the process there. You're going to need to fund that. So what does that pathway look for you?
That is all part of the definitive feasibility study. It's all part of the budget for the DFS, and it's all completely funded through CHES's investment of 12 months ago. So CHES's investment of nearly 30 million euros gets us right through to bankability.
Beautiful. Okay.
Final investment decision.
Right. And then the next step is conversations with well, presumably you're going to have to sell this into market, whichever versions or whichever amounts of the different products that you could create, you're going to need to sell these into market. So how are those conversations going?
The conversations are going well considering the stage that we're at. So another part of the EIT's brief with us is to introduce us to off-takers. They've put us, or potential off-takers, they've put us in front of 4 or 5, I think now, above and beyond the people that we've made our own direct contact with. I'm confident that we will be able to talk sensibly about offtake, in the first half of this year. Hopefully, at the earlier stage of that. I think a part of that is because of what we're seeing globally with the supply-demand equation. If you looked at the normal lifestyle of a mining life cycle of a mining project, and when you'd have significant offtake discussions, this would probably be quite early in an ordinary sense. But I think the supply-demand equation for lithium going forward is quite well appreciated now, and that means that potential off-takers are having these conversations earlier than they might have otherwise had.
Okay, I talked about your sort of technical competence earlier. I mean, so how are you proving? I get the lab test process. You're going through DFS, and you've got some great partners in there. But who in the team is actually delivering this technically?
So in terms of the metallurgy, the chemistry, etc., we have a fellow on the team called Grant Harmon. Grant was the chief lithium metallurgist at Talison Mine for 6 or 7 years, I think. Grant is very well versed in lithium metallurgy. I don't know of anyone in the world that's better at this than Grant. Certainly not who's available in the market. Who doesn't already work for one of the majors. Grant's been involved with us for 6 years, I think now. So he's been right through all of the iterations of the various extraction methods and the various flow sheets that we've worked with and tried and tested. He is our go-to guy from the technical point of view. But around Grant, we have, we've built quite a significant team of people who are all very good at the specific parts of their job that they need to do. Most of that team is located in Europe, obviously. Grant's down here in Western Australia. But, part of that is also beneficial. WA has become the largest producer of hard rock lithium via spodumene concentrate over the last couple of years. So there's a significant amount of knowledge being gained in this part of the world because of that over that period of time, and Grant has had direct access to all of that knowledge and all of that IP.
You've also got a few byproducts, we'll call them, in there too. I've noticed tin, which is becoming very popular as of late. What are you planning to do with that? In fact, when will you understand the value of that, if there is any?
Sure. So there are a number of byproducts. There's a number of what I'd call potential byproducts. And really, when we're talking about the economics of the project, it's only the tin that we really take into consideration. There's a couple of reasons for that. Cinovec is a historic tin mine. Tin has been mined off and on at Cinovec for nearly 600 years. And so there is a great deal known about the tin and the tin metallurgy, how it behaves and what have you. There's been, I think, 40-odd thousand tonnes of tin produced from Cinovec over that period of time. It hasn't been mined since shortly after the wall came down, because the tin price at that point was about $5,000 a tonne, and it was sub-economic. Tin today is almost $30,000 a tonne. I think it's risen about 30% in the last month. And it is a very valuable byproduct for us, but it's a true byproduct. That is that we don't have to decide which of those metals, tin or lithium, we're going to favour in the processing, according to what's flavour of the month at any particular point in time. The tin and the associated tungsten, which is of significantly lower value, the tin comes out right up front at our first processing stage, a wet magnetic separation. And through that wet magnetic separation, we actually increase the relative lithium grade in the concentrate. So it's beneficial at that point in time, and it's very handy. The other great thing about tin is that whilst lithium is not an LME traded metal, no terminal market and what have you, tin is exactly the opposite, and very easy for us to sell tin. The outlook for tin is great, but at $30,000 a tonne, it's a very valuable byproduct for us. There may be other things that we can sell and add to the economics as well, potash, for example, and some other minor metals. But really, the tin is a key. In our most recent PFS, it had the effect of lowering our overall cost of production of battery-grade hydroxide from just under $5,000 a tonne to just under $3,500 a tonne.
Okay, so that could be significant for you going forward. Just want to come back to something you said. Obviously, this Ches has put in like this $30 million, right? But you still
euro.
Yeah, euros. Sorry, you're right. You did raise some money recently yourselves, about $7 million earlier this month. I mean, why did you need to top up?
Okay, so Ches's money went into the project company, Geomet, and it's in that company. Now, European Metals is paid by Geomet to manage the definitive feasibility study. So European Metals doesn't need a great deal of cash, and we've always run, fairly lean on cash balances. We were approached last month by a group led by one notable Luxembourg-based industry fund who wanted to put some money in, wanted to become shareholders on the basis that they wanted to be there when we needed the big money in 12 months' time, or whenever that decision comes about. And it was effectively a bought deal. We thought it was prudent to do that and to bring a couple of significant institutional shareholders onto the register. That we haven't really had insto shareholders historically, so it was just a nice fit.
Okay, appreciate that. You've been on a nice run for the last 4 months. Share price is doing quite well. You're around, just over 200 million bucks Aussie. People are paying attention, as they are, to the lithium sector generally. What do you think people can expect to see this year? Is there anything of interest, or do you think things are going to just settle down for a bit until you get that DFS?
No, I think that there are some key things. There are obviously stages of the DFS that we'll report on. bring the market up to speed with the progress of the DFS and the various stages. And within that, there are some key stages: the lock cycle test work, the pilot plant test work, all of these sorts of things that are, I know what you're saying. A DFS can be a little dry at times, but there will be some key milestones in there that will, I think, be significant for the market to hear. There are a couple of other things we have in mind with regards to enhancing the project. Not something that we've spoken about publicly up to this point in time, but I noticed a couple of research analysts who have written research on us recently have highlighted the possibility that we could look to go to a phase 2 and increase production at Cinovec, and that is possible. It's a very, very large resource, as I mentioned. When we put together the PFS, we were, on our own as a small, West Australian mining company looking to fund a big project. So the plan that we put in place for the PFS, a 25,000 tonne per annum production plant, was about the right size. A few things have changed. We now have significant partners, significant from a number of senses, political, but financial as well. And we have a significantly better macro environment, particularly in the EU. So to talk about doubling the production at Cinovec is something that I think we'll seriously consider a little later in the year. Certainly going to 50,000 tonnes against the backdrop of the forecast demand in the EU is not a big number. So that would be a key, but also, probably the most significant thing we could do in the short term would be to announce an offtake partner.
And will you?
I certainly hope so, Matthew. Look, it would make a significant difference. We all saw the difference that development made to a company like Piedmont, for example, with their involvement with Tesla at Battery Day. And what it does is it just brings a company in the development stage so much further up the curve, so much more quickly. And what I think is important about that particular transaction is that I think it was the demand side recognizing that in order for the supply side to catch up when it needs to catch up, you can't rely on the incumbent majors. There needs to be a number of the companies in the development stage brought up the curve quicker so their product can get into the supply chain as quickly as possible. Or, it is likely that there's going to be lithium supply shortages in the not too distant future.
Just to kind of finish up here, and as a sort of comparative type question, and it's in the context of ESG. Okay, so how do you think your project compares to spodumene hard rock operations? Okay, so
we're quite comfortable that our ESG credentials are going to stack up very well, both from an absolute sense, but also from the point of view of a comparison with, for example, spodumene. And the whole ESG question, the LCA lifetime carbon assessment question, is becoming more and more important. There's no doubt about that. We will commission a formal study, a formal LCA, a little later in the year, but anecdotally, we believe it'll stack up very well. There's a couple of reasons for that. If you think of it firstly just from the point of view of local, the supply chain. If you're mining spodumene here in Western Australia, putting it on a ship, shipping it 7,000 kilometres or whatever it is to China, and processing it there, and then moving it to, say, Japan to be turned into cathode, and then moving it to the end user, clearly, that's going to have a greater CO2 impact than for us mining it, processing it just a few kilometres down the hill, and then putting it on a truck, say 100 miles to Volkswagen at Zwickau, or 125 miles to Tesla at Berlin. Just anecdotally, we think that's going to be in our favour. The other thing about that spodumene shipment, of course, is that 94% of that shipment is waste. It's only 6% lithium con. So, we do think we'll stack up very well. We're keen to see what the formal study says, but our feeling is that our ESG credentials will be very good. From the S part of the ESG, the social aspect, we are re-entering a historic underground mine. We're not breaking new ground. It's not an open pit. It's not everything will be underground in the front end. So very minimal impact socially and environmentally. And, that's done deliberately, it's done with good reason, and that is to ensure that we do have very good ESG credentials.
Beautiful. Look, Keith, thanks for that kind of, we've had a nice introduction to our audience, perhaps hasn't heard this story before. Nice, significantly advanced lithium project at the heart of the European ecosystem. Stay in touch. Let us know how you get on. We've got a few deliverables this year. I'd be delighted to take that phone call.
Look forward to chatting further. Matthew, thank you very much for your time.